it's one of the strongest signals in technical analysis for reversals. But how you trade it is really important.
Okay.
So right here, obviously, like we can see right here, the price from this day to this confirmed high, the price was trending up, right?
Yeah.
This is an uptrend. So now what we're looking for is, because we have a bearish divergence, we're looking for a reversal.
Okay.
We're looking for the price to continue lower. So this divergence tells us that there's a reversal coming. So we're not taking a trade at the divergence, we're taking a trade after the divergence plays out. So once we get this confirmed high and low, we go ahead and drag this high to this low, and then we identify a premium. And we can see right here, it's nearly where 618 is, and also if you put the 0.5. So this 0.5 right here, this would be your premium. So once you've identified the premium, so essentially what's happening is, once you identify that right here, once you have this confirmed low, your trade does not take place to go short. This is to go short, remember. If you're looking for a bearish divergence, you're identifying premium, this will equal a short entry. If you're going here, this would be a long entry. So let's be specific.
Okay.
Okay, so once you find a bearish divergence, you wait for confirm high, confirm low. Once that gives you a confirm high, confirm low, it gives you a premium. Once you get that premium, you're going to wait for the price to enter the premium, right?
Yeah.
And then from there, you're going to wait for the RSI to be, overbought. So once it gets here, let's go back to the time frame. So we've already identified the divergence right here. There we go. Right. Now we're just waiting for price to reach our premium. Once it hits our premium, so going back to it, let's go right here. Let's go to the RSI. Where's the RSI at? Right. Is the RSI overbought at our premium?
Yeah.
It is. So this is now going to be a short entry. Now, what's also inside of our premium?
Okay.
A fair value gap. So now you just included a premium and a fair value gap. After that, you take your short entry. You take your short entry somewhere here. You go lower time frame. Remember, inside the gap, inside the premium, your only mindset is I'm going short, because I already have a bias. I'm going short because it's a bearish divergence.
Yeah.
Right. Remember, bearish divergence tells you it's a reversal, meaning it's going from an uptrend to a downtrend.
Okay.
So what ends up happening, I don't know if you're recording. Hopefully you're recording. This is actually pretty important.
Yeah.
Right here, this then becomes sell side liquidity, or you could just name it as liquidity.
Okay.
All right. Once you have sell side liquidity, you have a short entry at the premium. Now you have a take profit below sell side.
Okay. So you target.
That's all you got to do. Yep. Well, you don't target below the confirm low. You target below sell side, because you already know that they're going to sweep liquidity. So you already know they're going to go below this level. You're not going to target right here. You're going to target below, because you know they're going to take these people out, right? The market wants to take people out. So from there, it's up to you whether you want to take profits maybe over here, because there's some gaps down here. Maybe if you're confident that price will go even lower, you can take profits here. But ideally, the take profit in ICT is down here, right below this level. But if you're an analyst and you have conviction that we're going to take out this low, tap this fair value gap, this gap, well, then you can take TP in here, right?
Yeah.
But that's besides the point. What we're really focusing on here is, once you identify a bearish divergence, you're not taking the trade here. A lot of people are going to be like, oh, there's a divergence, I'm going to short right here.
Yeah.
The stronger trade is to wait for a premium to form, which is waiting for a confirmed low to form and a confirmed high. Once you have that, now you have a higher quality trade, where you have a bearish divergence showing you signs of a reversal. You use that to identify a premium, right? So let's label this. So this is a high. What is this confirmed high? This is a higher high. Following along?
Yeah, I'm following along.
And then once you have this, this becomes a lower high. And once you have a lower high, what does this low become? This low becomes a low. And now your expectation is price will form a
lower low.
Lower low. And that is market structure right there.
Okay, I see.
And that's how you use premium with divergence and market structure and liquidity. All in. That's one video right there on how to take a trade based off those concepts put together into one. And obviously we end up coming back down there. And then here we have our lower low.
Yeah, I was always entering at the top once I noticed the divergence. I'll always be entering like as soon as it forms.
Yeah. So so let me be clear. There's a trade setup in here, but this one is very high quality. The one that I just explained. There's a trade in here, but the planning for it is different.
Yeah.
Because this is
took
gonna
that
be a
trade, and then I get scared once that lower high, because I start chasing back, and then end up taking TP at that lower high, and then ends up going way further.
Yeah.
That's usually what happens to me.
Well, if I were you, start trying to apply this. Now, this only works. Remember, divergence only works. Let me say this. It only works if the market is trending. If the market is going sideways, you're not looking for divergence. Because in order to have a divergence, you need to have a higher high, lower high, etc.
Yeah.
It doesn't work if you have equal highs, right?
Yeah.
So right here,
or
we're
equal
currently
highs
at
or equal lows. It doesn't work.
No, because it has to be in a trending market. Because divergence is to identify reversals. Can you really reverse if you're going sideways? You're not really trending, right? Reversal is going from up to down or down to up.
So you're saying like equal highs and lows like form when they go sideways? Is that what you're saying?
Like right here, you see how the price going sideways?
Yeah.
You're not looking for divergence in here, because this is not a higher high. This is just consolidation. Right here, the market is trending up, forming a high and a higher high.
Oh, okay.
So that video right there, I think is gold.
Wow.
I really just figured. I mean, I think I already knew this. It's just I didn't really explain this until today, because I was really just talking in the video and I started learning stuff.
Alright, I'm gonna post this 5-minute video.
Is it 5 minutes? Damn, I could have explained how to trade in 5 minutes.
Yeah, it was a
That is
6-minute video.